We're going to be talking today about something that I think a lot of traders have at least a passing familiarity with, but don't really know how they can use it and apply it to their trading plan. We're going to be talking about a technical indicator, specifically the Ichimoku Cloud. And as I kind of go through the first part of the presentation here, I want you guys to let me know how many of you have never ever even heard of the Ichimoku Cloud in the past, or maybe have seen it before, heard it discussed, but have never actually learned what it does, what it means, and how to use it in your trading. Most people probably have seen it before. It's becoming more popular, but it wasn't really something that picked up quite a bit of attention amongst traders until very recently. So that's what we're going to be talking about today. I want to read our standard boilerplate risk disclaimer before I get started here. Day trading, short-term trading, options trading, swaps, and futures trading are extremely risky undertakings. They generally are not appropriate for someone with limited capital, little or no trading experience, and or low tolerance for risk. Never execute a trade unless you can afford to and are prepared to lose your entire investment. All trading operations involve serious risks, and you can lose your entire investment. No trades or recommendations or advice, and we cannot be sued for losses of capital. All trades are for educational purposes only. Please contact your broker or registered investment advisor for execution margin and all other capital requirement questions. Everyone watching this presentation adheres to all disclaimers on optionhacker.com and alphashark.com. So I don't want to talk about myself too much because I want to jump right into the topic and the content here. But my name is James Ramelli. I'm a trader and educator here at Alpha Shark Trading. I'm also our director of operations, and I do regularly go on TV, so you may have seen me before in the past. I like to talk about the options market. Whenever these networks have need for someone to come on and provide options commentary, they typically come out here to Chicago and ask for someone out here to give them some insight on options markets and what those are saying about the broader equity markets and individual equities. So that is basically how I spend all of my time. And one of the things that I'm doing all day long is trading equity options and stocks. And the tool that we're about to discuss is something that is invaluable to my efforts in day-to-day trading, and that is the Ichimoku Cloud. So what is the Ichimoku Cloud? The Ichimoku Cloud is a technical analysis method that uses past, present, and future levels to help traders identify at a single glance if a security is in bullish or bearish territory. The full name of the study is actually Ichimoku Kinko-hyo. It translates from Japanese into one glance equilibrium chart. So basically what that means is that if you have an understanding of how to use the Ichimoku Cloud, you can look at a chart and with one glance, I mean literally 10 seconds, figure out whether or not that security is trading in bullish territory, bearish territory, or neutral territory, and get information like when breakouts might be happening, where I should be looking for breakouts, and identifying key levels of support and resistance. The cloud has 6 different components, and each component is calculated differently. We're going to look at the individual components, and they have some interesting names. They're, like I said, this is an indicator that was developed in Japan, so the names of the components are Japanese names. You don't need to really know the names after you know what they mean and how they work. All you need to understand is what each of these components is telling us and how we can glean information off of the way that they're relating to each other on a chart about the strength and trend of that underlying security. So we're going to go over what the cloud is. I'm going to show you the different components of the cloud. I'm going to show you how we can use the cloud levels as support and resistance. We're going to talk about using the cloud to verify trend and using the cloud to trade options. So here we have the Ichimoku Cloud with Alibaba on a daily chart. And now that we have this up in front of you, is there anyone else that can say that they've seen this before but don't really understand what it is? And I think there's probably quite a few of you that have probably maybe seen this on some chart analysis site before in the past, because it is a popular indicator amongst really in-depth technicians. But what's nice about the Ichimoku Cloud is that even though it looks intimidating, and honestly I think that's what scares a lot of traders away from it in the first place, is that it's actually really simple and easy to understand. As we go through this, you guys are going to start to see that these individual components are really just sets of moving averages that are calculated and projected onto the chart in a way that's a little bit different than what we would normally expect in a technical indicator. And that's a good thing, because that means that these levels are a little bit more novel than the levels that everyone else is using for stops, profit targets, and timing entries. So if you take nothing else away from this presentation, take away this. Here we have the Ichimoku Cloud, and I'm going to tell you how to read it with accuracy in 10 seconds. Anything trading above this shaded area is in bullish territory. Anything below it is in bearish territory. That's about the simplest level of analysis that you can do with the Ichimoku Cloud. But what that means is that I can, with just that little bit of knowledge, use this indicator to confirm whether or not a stock is in bullish or bearish territory, and then confirm other trade setups that I might be seeing on other indicators that I use on a regular basis. So there's 6 components of the Ichimoku Cloud. Like I said, they all have Japanese names. The Tankinson Line, the Kijun-san Line, the Senku-span A and B lines, the Kumho, and the Chinky-span Line. And we're going to go over these individually so you guys can kind of see how they are calculated and then get an understanding of why we have all of these sets of moving averages on the same chart at the same time, and what we can use all of that information for when we're looking for trade setups. So here's what they look like. They're very clearly labeled on the chart here. We're going to go over them individually, so let's jump right on in here. The first component is this green line that you see here directly under the current bar, and it's the Tankinson Line, and it's a moving average. It's the highest high and lowest low divided by 2 over the last 9 periods plotted under today's current bar. Now we're looking at the daily bar. If this was the 5-minute bar, we would be looking at the highest high and lowest low divided by 2 over the last 9 5-minute bars. If it was the 15, it would be the last 9 15-minute bars. You get it, right? All of this stuff adjusts whenever we change the time frame that we're looking at the Ichimoku Cloud on. But the Tankinson Line is a useful moving average to have on the Ichimoku Cloud because it shows me the first level of support when we're above the cloud or the first level of resistance when we are below the cloud. So if you take a look at the way that this is set up here, you can see that this first level of support really did prove to be a nice buying opportunity every time it's touched. A lot of traders like to use this Tankinson Line as a level to add to a long or enter a long on a pullback once we've made an upside breakout from the Ichimoku Cloud. You can see that that trade has worked out pretty much every time it's happened in Alibaba. Now right below that we have the Kijun-san Line, and this is a longer period moving average. It's the highest high and lowest low divided by 2 over the last 26 periods. So it looks at a little bit more time. We would compare this a little bit more to our 30-day moving average if that's something that you're using, but it's not quite the same as that simple or exponential moving average, right? And again, this is used by traders as a level for a trailing stop once a market breaks out above the cloud, a level to possibly add to a position, add to a long when we break out above the cloud. And I want you guys to kind of keep in mind as we go through this that everything I say relating to this chart in Alibaba, we could apply that to a stock that was below the cloud, but just reverse it, right? If here we're seeing, a stock that's trading well above the cloud, it's above the 9 and 26 period moving average, the cloud slopes higher. Well, if we turn this chart upside down, rather than this being our first support and this being our second support, this would be our first resistance, this would be our second resistance. So the Ichimoku Cloud doesn't really care about whether or not something's in bullish or bearish territory. It's still going to give me levels. It's not an indicator that only works for markets that are going higher. A lot of people ask me that question when we do this presentation. So the second component, or the first component of the shaded area that you see here is called the Senku-span A. And this is a really important component of the Ichimoku Cloud. One, because it creates one of the bounds of the shaded area that you see here. If you see the shaded area on the chart, this is basically the line in the sand between bullish territory above and bearish territory below. And the Senku-span A forms the bounds of one side of this shaded area. And it's unique in the fact that it's plotted 26 bars in the future. It's a moving average of these two moving averages, but plotted 26 bars into the future. So if we draw a straight line from today's closing bar, and that's not a very straight line, but you know what I mean, down to the Senku-span A that is plotted right here, this was actually plotted on this chart 26 days in the past. The calculation for today is plotted 26 days into the future. And this is the quote-unquote forward-looking part of the Ichimoku Cloud. Now, a lot of traders think that the Ichimoku Cloud is going to tell them where markets are going to go and give them an actual price level and target expectation for the particular security that they're looking, but that's not how it works. It does not work that way. I wish that it did, but it doesn't. All this does is tell me how strong and how sustained the current trend is in any given security. If the cloud is upward sloping like we see here, and the Tankinson A line is on the top of the shaded area, that is a strong and more sustained trend. Price action has to be bullish for that to happen. So what that tells me is that, hey, when we're looking at a market that looks like this and the future cloud is still upward sloping, there's probably really not that many short opportunities present in this particular security. Now, the second part of the shaded area, the Tankinson B, takes into account the most data out of any of the components we have in the Ichimoku Cloud. It's the highest high and low, so divided by 2 over the past 52 bars, plotted 26 bars into the future. Now this means that when we have a Tankinson B below the Tankinson A, the cloud is upward sloping, but if the Tankinson B is on top, the cloud is downward sloping. And what happens is if price action is like this, sustained and bullish to the upside, a nice channel, then the cloud in the future continues to slope higher as well. But if price action starts to get kind of sideways here, or sideways to slightly lower, then after enough time of that happening, the Ichimoku Cloud is going to start sloping lower. And what that shows us once this starts to happen is that trend is probably getting exhausted, and new longs might not be such a good idea in this particular security. Now we're looking at Alibaba here, we're looking at a stock, right? But this is something that I can use on literally every product under the sun that trades and is chartable. I can use this for futures, I can use this for Forex, I can use this for equities, I can use this for ETFs. All that changes is the time frame and the best application. We're going to talk about that a little bit more on the next couple of slides here as well. So the Kumho is the shaded area that you see here on the Ichimoku Cloud. That's the actual quote-unquote cloud, and it's a component of the cloud, but it really is just the space in between the Tankinson A and Tankinson B. Now in this particular chart, it's useful they actually color in orange, or this kind of lightish orange color, when the cloud is upward sloping, and red when it is downward sloping. Most brokerage platforms have the Ichimoku Cloud and will do the same thing. Some of them, however, you just have to look and see which line is on top to figure out the slope of the cloud. Everybody here trades through a platform that has the Ichimoku Cloud or has access to the Ichimoku Cloud. Even if you don't have it in your actual charting package, one, I'd be pretty surprised, because pretty much every discount broker out there that operating in the retail space gives people the Ichimoku Cloud in their charting package. They actually have it in Thinkorswim, TradeStation, Interactive Brokers, Trade Monster, Options House, just to name a few. So we know that this is important because it gives us that line in the sand between bullish and bearish territory. The final component of the Ichimoku Cloud here is the Chinky Spotlight, and this is just a plot of the current bar's price 26 periods into the past, right? Basically what we're seeing here is this closing price plotted 26 periods in the past. And all this does is help us with that single glance figure out how sustained this bullish trend is. Let me ask you guys a question. If a trend is sustained, and it could be a bullish or bearish trend, if it's a bullish trend that has been around for a while, if it's had some time that it's been in development and that it's been working out and trading inside of this channel, would we expect that the price right now would be above the price 26 days ago? Yeah, of course we would. That's what we would want to see in a bullish and sustained trend. Now, if we're looking at a cloud that looks like this, but this line right here isn't above or is inside the cluster of price action 26 days in the past, well, we know that this market is more in a consolidation period because it hasn't gone anywhere in those 26 days. Maybe the cloud has picked up a little bit, but we still haven't managed to move from the levels we were trading at 26 days ago, and that doesn't show us strong trend. Okay, so I've been saying the word trend a lot, and the Ichimoku Cloud really applies itself quite well to products that trend, and it doesn't necessarily mean products that trend well on an intraday basis or daily basis, just products that trend well at some point. And one of the things that is kind of difficult to figure out, and what I think is the most complex component of the cloud, is figuring out if I'm going to use it for crude oil futures or for equities or for equity futures, which time frame trend develops the best on. Let me ask you guys a question. Do you think trend develops better or becomes clearer in individual equities on the daily bar or on the 5-minute bar? What's the answer to that? Where does trend develop itself more clearly and with more sustained price action? In equities, on the daily bar or the 5-minute bar? Yeah, the daily bar, right? Yeah, most equities spend the day on an intraday basis trading inside of a range. 80% of most trading days are, or 80% of trading days are trading range days, 20% are trending days. Now, there's of course exceptions to that rule, right? I can say to you that equities tend to trend better on the daily, but there is equities that can trend well on shorter time frames. And equities are tricky because there's so many different types of stocks out there in terms of the price action that we tend to see in them on a day-to-day basis. Would you guys say that price action on a day-to-day basis in two stocks like GE and Facebook are even really in the same category? We could probably consider them completely different products, right? GE is not going to trade on a 5-minute bar like Facebook is. And there are handfuls of equities that we can see developed trend on shorter time frames and day trade them with. We're going to talk about that a little bit more here as well. But I want to use the Ichimoku Cloud in all of my trading because unlike other indicators, it has the set of moving averages that gives me more data than a simple or exponential moving average would, right? Fib levels and other popular technical analysis methods have a lot of people following them, and I tend to think that a lot of orders and stop losses are placed based on those levels, and that's not something that I want to participate in, right? The cloud takes into account a lot of data and gives me pretty clear levels of support and resistance for setting profit targets and stops. The best thing, hands down, about the cloud is that it can be applied to any trading plan and any product because it's simply a confirmation indicator of trend and something that gives us a little clue on when we might see some breakouts at any given point, right? So the cloud is different. The cloud is different because it's one of the only indicators that is past, present, and forward-looking. Now, we talked about the limitations of that forward-looking component of the Ichimoku Cloud. It's not a magic 8-ball that's going to show you where price is going in the future, right? But it will tell me whether or not trend is in a sustained and strong pattern right now, or if we're in a trend that might be looking to start seeing some exhaustion or possibly reversing sometime soon. So basically I can use all of these moving averages to get a good idea of support and resistance, apply it to any security, and because it's not as widely used as many other indicators, I think that my stop losses and the levels that I use based on the cloud are a little bit safer than anything else. Let me ask you guys a question, and I already kind of know the answer to the question, but how many of you here have seen a position that you've taken on in a day trade or something else where the market seems to run, touch your stop almost exactly, stop you out, and then reverse and move back in your favor? How often has that happened to someone here? Or has that never, is there anyone here that's never happened to? That would be a better question. Definitely happened to me, yeah, right? All the time, all the time. And the reason that happens is because institutions and algorithmic trading firms, they kind of know what it is people are looking at. They know the tools and the systems that are at play in the market, and they know that, for example, the 10-period moving average or the 50 and 200-period moving averages might have a lot of trailing stops sitting on them, might have a big supply of stop loss orders there that are ripe for the picking, and they can run to those levels, stop people out, grab some quick cash, and the market comes right back and corrects itself. But when we're using the Ichimoku Cloud, I truly believe that I'm a little bit safer from that happening because it's not as widely used or as popular. I don't think there's as many programs out there that are gunning for the levels because there isn't as much volume stacked up on top of the levels used by people trading with the Ichimoku Cloud. Now, the cloud for options traders, I want to mention this because I myself consider myself an options trader first and foremost. Options traders, we can use the cloud very, very well. It's one of the most useful indicators I have because if I apply the Ichimoku Cloud to all of my trading plans, I can steer myself away from false signals that might be developed by other methods that I'm using on a daily basis. One of my big trading strategies revolves around trading unusual options activity and institutional order flow. And one of the most difficult things to do when trading that type of strategy is to figure out whether or not the institution behind the equity options orders I'm seeing hitting the tape is using those options for a hedge or for a speculative bet. And the Ichimoku Cloud helps me determine the strength of current trend and then helps me figure out whether or not an order or a signal that I might be seeing is in agreement with a strong or not so strong trend that we have developing right now according to the Ichimoku Cloud. The same thing goes for any other type of indicator that I use. I like to trade earnings and catalyst events. I never, ever, or very rarely fade the trend that we have in the Ichimoku Cloud going into earnings because it shows me how strong trend is, and I can see whether or not a trade that I'm thinking about taking is in agreement with this current trend and momentum in any given security. So there's a couple of applications that we went over for the cloud so far, but there are so many more depending on the type of products you like to trade. And this is applicable for traders that are day traders, swing traders, long-term traders. It just depends on how you want to apply the cloud to your trading plan. How many of you here, and just put it into the chat box so I can get a general idea, how many here would consider yourselves strictly day traders, strictly swing traders, or strictly term investors? Odds are most of you will probably say that you're a blend of these three, or a blend of two of these three. There's not too many people out there that really just do one of these things. But what's nice about the Ichimoku Cloud is that, and I would consider myself a blend of all three as well. I have accounts that I day trade really aggressively on a daily basis. I have accounts that are more swing trade type of positions are held there. I'm looking at putting on positions that expire in the next couple of months, right? And then I have long-term investments as well. I actually am in the process of kind of rotating some of this stuff around in the longer-term portfolio. But what's nice about the Ichimoku Cloud is that I can use that for all three of these, which is nice because not many indicators can do the same. The day traders can use the cloud to time breakouts on an intraday basis. I can also use the cloud to find support and resistance during the day. Swing traders can use the cloud to help avoid trading against the trend. And we can really see on different time frames when swing trading how trend is developing and where it's, and that can help me time my entries and exits with swing trades. With equities, it's a fantastic way of spotting potential breakouts. Excuse me. Long-term traders, and this is like the investor that I'm talking about, someone who is investing money for, way down the road. And that type of person is probably continuing to contribute to this investment or this equity account that they have. And it can be difficult sometimes to decide when to time those contributions or when to buy more of the market. And using the Ichimoku Cloud and those levels for pullbacks that we were talking about can be a really nice way to time entries on a pullback. Nobody likes to buy highs, but everyone's afraid of missing out. So this is a good way to go about doing that. It also can give me a heads up as to when a very long run sustained trend on the weekly or monthly bar might be starting to turn around, and maybe that is a signal to rotate into something else. Okay, so it doesn't matter what type of trader you are. I just described all of you. You're going to be able to use the Ichimoku Cloud to benefit you. And time frame is the main thing that we have to change with our considerations when trading the Ichimoku Cloud. Time frame is really important. If we're using the Ichimoku Cloud and we're looking for certain trade setups, it's important to understand which products trade best on particular time frames. Equities tend to trade best on the daily. Like I said, there's exceptions to that. Stocks like Facebook, Tesla, Alibaba, Google, Netflix, Apple, Twitter, those are all names that I could probably trade on the 15-minute bar during the day because they tend to trend well from open to close. You know, would I want to trade Coca-Cola or GE or UTX on a 5 or 15-minute bar? Probably not. Currencies and currency futures, really, really good application for the cloud. We were looking at the British pound last night in a webinar that I gave on the Ichimoku Cloud, and I was just amazed at how accurate the signals have been on the 4-hour bar over the past couple of weeks in the Ichimoku Cloud. Crude oil futures, very quick. I can trade them on the 5. Treasuries, same thing. I can trade them intraday. So it's about figuring out which time frame has the best development of trend for your particular product that you're trying to trade, right? And this is something that is actually really easy to figure out. I could give you a big list of what I think is best, but for equities, and a lot of you probably are trading individual equities that maybe I'm not or don't have interest in, for equities it's really easy. All you have to do is look at the different time frames. Put the cloud on your chart, look at the daily, look at the 4-hour bar, look at the 1-hour bar, the 15-minute bar, the 5-minute bar, and see how well trend tends to develop on those time frames. Does the market tend to be choppy on the 5, but we do see trend develop on the 4? Well, then I can probably use it on the 4-hour bar. Go back and test it. It's really easy to do because the Ichimoku Cloud makes it very easy to see whether or not breakouts were successful after they broke levels of the cloud. We talked a little bit about this idea of pullback trading using the Ichimoku Cloud, and this is one of the best uses for the Ichimoku Cloud, using the key levels and zones of support that the cloud flags to figure out when I might want to get into a position on a pullback. The best signal is a breakout of the cloud. So when we break the cloud to the upside, that's the best signal. If we break the cloud to the downside, that's a good short signal. But once it happens, timing an entry, if we missed the first signal, can be difficult. And this 9-period moving average that you see here, any test of the Tankinson line, here, 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 has proven to be a pretty good buying opportunity. So what I can do is lean on these levels of support to add to new longs if I've already missed the initial big breakout that we were looking for, right? So this is also something that works really well for the trader with a longer term time horizon who's looking for an opportunity to add to their position or to add to this long-term investment that they have. So it's good for new entries, also good for adding to positions. Okay. So direction and strength of trend is important when we're talking about slope of the cloud and thickness of the cloud. There's a lot of debate amongst Ichimoku Cloud practitioners about whether or not the thickness of the Kumho or the shaded area is really even all that important. I truly believe that it is pretty important because it's just kind of logical, right? If we have a very thin cloud like we do right here, well, take a look at that. Happens when price action is sideways like this. When the cloud is thin, it tells me that there really isn't that much strength in trend right now, and there's not really much of a trend that has developed either. So what that means is that the market can be very prone to reverse when something like that happens. So I really like to see a thick shaded area here, a thick cloud that has a strong slope in agreeing with the direction of the current trend. So if we're above the cloud, I want to see the cloud sloping higher, and I want to see it thick. And this is what a really strong developed trend looks like on the Ichimoku Cloud, by the way. Cloud slopes higher, fairly thick shaded area. The stock is above the cloud. It's also above the 9 and 26 period moving averages. The lagging indicator is above the price 26 periods in the past, and both of these fast and slow moving averages are also above the cloud. That's about as strong of a bullish setup that we can ask for. Really, really, really strong looking setup there on the cloud in Alibaba. Now, when we get into periods of consolidation, meaning the market doesn't see any sustained breakouts in either direction, meaning to the downside or to the upside, the cloud tends to get kind of sideways, and it also gets thinner. So take a look at the chart that we have here in Google, and this is a fairly long period of time. You can see they had 3 earnings reports throughout the time that we have on this chart right here. Do you guys think this would have been an easy time to trade Google? Would this be an easy set of price action? Is this the ideal price action that a trader looks for? Probably not, right? As you can see here, none of the breakouts really had any follow through. It would have been very difficult for a trader in a long or short position at any point in this time period in Google to see some sustained profits and take profit targets as follow through happened in either one of these directional breakouts. What happens when the cloud gets like this is it tells me and gives me the signal to avoid the setup that probably isn't going to work out because it does not have a direction that the cloud is implying trend can develop in. Now, what we had here at the end of this period of time that we're seeing is that when we broke the cloud to the downside here, tested and started to trade lower, price action was bearish enough to start moving the cloud lower. But before we even reversed to the upside, the 9 period moving average crossed above the 26, and then we violated that short signal right there. And as soon as this happens, this is no longer a short in Google. And the cloud can really help me figure out when these reversals might happen and when trend could possibly develop. So it's really, really simple and easy to analyze any security with the Ichimoku Cloud. It's simple enough to really quickly and easily analyze stocks, ETFs, futures, indices. And I'll ask you guys a question right now. It looked like a pretty intimidating indicator when we first put it on a chart, right? There was a lot of stuff going on there. But does anyone here think that this is on the complicated end of technical indicators that are available out there? Is this a really difficult concept to grasp? Is it complicated in its structure or in its application? No, it's really not. You don't have to be a CMT to understand how to use the Ichimoku Cloud, right? It's something that is really simple and can, in small ways or large ways, really impact your trading plan by helping you figure out the strength of trend at any given time. I can use the cloud to do more than that as well. I can determine the strength of a security and where the trend is at any point, identify support and resistance levels and use those levels in my trading plan. I can determine the likeliness of breakouts and determine risk and reward setups for potential trades based on the Ichimoku Cloud. Now, there is some debate amongst practitioners, like I said, about applications for the cloud, but we kind of covered all of this already. I said that I think the thickness is important. I said that I think that it's important to have a slope that matches with the current trend, and that the thickness of the cloud matters, and that the lagging indicator, while it's something I have on the cloud, isn't really something that I consider to be all that important. So I want to do something really, really quickly here before we wrap up. I think I still have a little bit of time left. I want to go over any 4 securities that you guys name out really quickly on the Ichimoku Cloud, and I'm going to remove some of my other indicators here because they're for other things. So we just have the Ichimoku Cloud. So just shout out 4 stocks that you would like to see on the Ichimoku Cloud, and we'll I'll go over them for you here. Why did this disappear? All right, so I'll just do these really fast. GDX. Oh, wow. So GDX really, really bearish right now. As you can see, the Ichimoku Cloud is very firmly downward sloping. The 9-period moving average well below the 26. Now we've tested above the 9-period moving average, but as you can see, since we broke the cloud to the downside, any tests of the resistance levels in GDX that the cloud has given us have been sold off, and they've been sold off before the cloud was even downward sloping like this. So now we're seeing the trend develop much more strongly, and I really would not be looking for any long setups whatsoever in GDX. Netflix. So Netflix has a pretty interesting one because they did just report earnings and the stock did rip higher on earnings, and now we have a big space between where the stock is now and the Ichimoku Cloud below it. With that being said, both 9 and 26 period moving averages are well above the cloud. When a gap like this happens, it can take some time for the cloud to kind of right itself. But what we're seeing here now is after the follow through we've had, the cloud is giving us no indication whatsoever that a short would be a good idea here in Netflix. Tesla. I was just talking about Tesla yesterday when we were taking a look at the Ichimoku Cloud. Everyone seems to have questions about Tesla. So Tesla, again, not a good looking chart. Cloud is downward sloping. We broke the cloud down here, and again you can see that when we've touched or passed the 9-period moving average, the market has sold off, and now we're having a downward sloping cloud. Very bearish looking chart in Tesla. I'm going to be getting short ahead of earnings next week in Tesla. Twitter. Yep, Twitter is now below the cloud. It gapped lower after the hype over the takeover went away. The cloud is flipped and is now downward sloping. It's going to start developing a bigger slope to the downside here as price action remains below the cloud. Very bearish looking at that into earnings. So that's really fast, right? But we've actually made this process a little bit faster. We created an indicator that automatically ranks a chart setup on the Ichimoku Cloud with a scale from -9 to +9, and that tells me how strong the Ichimoku Cloud indications are for trend at any given time. So 9 is the most bullish, -9 is the least bullish, and I don't even really need to look at all of the levels and try and figure out where they're at. I just look at this one number in the top left-hand corner of my screen. Now this indicator that we developed also helps you time your breakouts. If a breakout happens on any time frame, and this switches as you switch time frames, if a breakout happens on any time frame, the indicator will read strong bullish or strong bearish if it meets criteria for a strong setup. So it can be used to confirm breakouts on any time frame. Okay, so I have something to offer you guys here, and it is a workshop that we have on trading with the Ichimoku Cloud, and we're going to give you our indicator that I just showed you as well. And this workshop is only $97. We really don't like to offer educational products at a huge high-dollar, high-ticket amount because we want this to be accessible to anyone that's interested in it. We truly believe that the Ichimoku Cloud is amazing for trading stocks and options, but can be applied to any product and any trading plan that you want to apply it to. In this workshop, and it's a really lengthy workshop, it comes with a ton of supplemental material. We're going to go over strategies for the cloud setups that you guys want to see for day trades, swing trades, and longer term plays, and we're going to spell out with pictures and snapshots of charts 6 of the best setups on the Ichimoku Cloud and show you exactly what they look like, so you'll be able to go and apply them to your trading plan right away. As soon as you make your purchase, this is going to be sent to you in a link. You're going to be able to watch this on demand. You can watch it as many times as you want. You have absolute freedom to watch it on as many machines you want, whenever you want. There's no limit to the number of times you can watch it. You can keep it forever. You'll always have access to it. So like I said, you get our workshop on how to use the Ichimoku Cloud. It also comes with this indicator that you can apply to Thinkorswim right away. Unfortunately, it only works for Thinkorswim. The indicator only works for Thinkorswim. The workshop is going to teach you how to use the Ichimoku Cloud in any platform you have, but the indicator that this comes with only does work for Thinkorswim. So keep that in mind. If you're, getting this to get the indicator, you have to have Thinkorswim to upload it into your platform. So I only have a few minutes left here. I want to take a couple of questions, as many as I can. What modifications do I make to the toss settings to get the cloud to look like that? Oh, none. That's exactly what it looks like in Thinkorswim as soon as you upload it. So as soon as you select Ichimoku Cloud on your Thinkorswim platform, that's exactly what it looks like. We use the standard settings. We do not use any modified settings on the Ichimoku Cloud. A lot of research has been done into whether or not using a modified Ichimoku Cloud, either with the moving average lengths changed or something else, that's going to be something that doesn't really improve the results of using the cloud at all. So we keep it as it is. You might just have like a different theme set up in Thinkorswim or something like that. That's very possible. But yeah, I use the standard Ichimoku Cloud. Standard settings. All right, any other questions, guys, here? I think I have a couple of minutes left here, maybe like 2 minutes. So any questions on anything we went over here, anything in this offer? If you found this interesting about the Ichimoku Cloud, you're going to absolutely love the workshop. It's only 97 bucks. It's a ton of content for $97. This is one of our most popular workshops, if not our most popular workshop. And I think a big part of that has to do with this right here. The workshop revolves around these 6 strategies using the Ichimoku Cloud, and we give you examples of what they look like in price action and with candlesticks, so you can go and identify them right away in your trading and in securities that you're interested in trading. Is this considered an update to the other? No, this indicator has never been released before. We only make it available as part of this bundle. You can't even purchase this from us if you want it by itself. You cannot purchase it by itself. And the indicator is just a easy and kind of cool tool to add to the Ichimoku Cloud. Something that supplements the workshop that we have here. The other indicator that we have for the cloud does something completely different. It's a completely different thing. So any other questions here, guys? I probably have time for like literally one more. Yeah, it works amazingly for Forex. Ichimoku Cloud in its first applications was actually some of the best results. Most of the literature on the cloud actually revolves around Forex. We talk about that quite a bit in the workshop that we have here as well. Alrighty, so I think that brings me up to the end of my time here. I'm going to go ahead and put the link in here again one more time for you guys. Thank you very much for having me here today and for all of your questions. I really like doing these presentations when you guys are really attentive and participating there. The workshop itself is about 3 hours long, but there's 2 versions of it that you get with this. One of them is a little bit older, and then one of them is newer with newer examples. So the total amount of content is probably more in like is over 6 hours.